in order for you to look at retirement in a good way, you need like three buckets of money in terms of looking at your emergency money, which is a short term.
So your first bucket is
an emergency bucket of money, and that would take care of things like you lost your job, say you want to take a vacation. The second bucket would be a short term bucket, which would involve.
So you're saying the first bucket is actually an emergency bucket?
Emergency bucket, like your money market account, or you could have a savings account, where you can actually, if something comes up, that you can actually dip into.
And a lot of people don't know that you can actually dip into the money market without as much penalty as the other options.
Yes, a money market, pretty much, there's no restrictions. It's just like having a savings account at the bank. It's just that you get a little bit more interest rate, interest on the money. But then you have the second bucket, which is a short-term bucket. That would involve like a mutual fund, where you can actually put money away, say for the next 3 to 5 years, and say you could actually look at things like disability, say the loss of a job, or say you want to buy a new house, or you could take from that bucket to actually put a down payment down on that house. And then the third bucket would have to be a long-term bucket, which involves your retirement accounts, like your IRAs, like your annuities, your 401k and the jobs. But what I realize is most people don't have the middle bucket.
Right.
And as a result, they whenever a situation arises, they actually go through their bank account or whatever little savings that they have, and then they go right to their long-term bucket, which is their retirement money.
And there's a penalty for going to the long-term bucket.
And most people do not realize that taking money away from your 401k or your IRAs, you would penalize a 10% penalty, as well as paying taxes, on the money. So you're pretty much giving away to IRS about 30% of that money that you would withdraw. So if you take $10,000, you're looking at giving IRS $3,000.